Ever notice how some people, no matter what the markets throw at them, just kind of sail through?
Yeah, like they've got some secret weapon or something.
Right. Well, today we're going to unpack one of those secret weapons. And it's not as complicated as you might think. We're diving into The Little Book That Saves Your Assets by David M. Darst.
And don't let the title fool ya. This book's packed with insights that can make a huge difference in how you manage your money.
Okay, so let's jump right in. Darst starts off with this story about a guy who put every penny he had into, get this, a railroad company.
Oh boy, here we go with the railroad stories. But I'm guessing this isn't one of those feel-good tales of the golden age of train travel, right?
Not even close. This is more like a cautionary tale. The railroad industry tanks. The guy loses everything. And it all boils down to one big mistake.
Putting all your eggs in one basket. Or should I say all your money into one stock?
Exactly. And
Oh.
that right there is why diversification is so crucial. It's the bedrock of a sound investment strategy.
Right, you've got to spread your investments around. Don't just rely on stocks or bonds or real estate alone. It's about having a mix, a well-diversified portfolio.
So like if one area of the market takes a hit, you've got something else to cushion the blow.
Exactly. It's like that old saying, don't put all your eggs in one basket. Because if that basket falls,
You're in trouble,
Mhm.
and nobody wants that,
Right.
especially when it comes to their hard-earned money. So we've got diversification as our foundation, but how do we build on that? What's the next level up? That's where strategic asset allocation comes in, right? Instead of just randomly diversifying, we're talking about being really intentional about what we put where.
Exactly. It's like, think about building a house. You wouldn't just use only doors.
Definitely not. You'd have walls, windows, a roof, a foundation.
Right. And they all have their own purpose, just like different types of investments. That's what strategic asset allocation is all about, finding the right mix of those building materials for your portfolio.
Okay, so how do we figure out what that perfect mix looks like?
Well, it's going to be different for everyone because it depends on things like your risk tolerance and your time horizon.
So someone younger who's got more time to recover from market ups and downs might be more comfortable taking on a little more risk.
Exactly. They might choose to have a larger chunk of their portfolio in stocks, for example, which have the potential for higher returns over the long term.
But someone who's closer to retirement, they're probably going to want to play a little safer.
Right. They might prioritize protecting what they've already earned and focus more on investments that are known for stability, even if it means slightly lower returns.
Got it. So we've got our foundation with diversification, and we're building our financial house with strategic asset allocation. Now, what about this thing called rebalancing?
Ah, yes. Rebalancing. It's like, think of it as going back and making sure your house is still in good shape after a while. Like making sure the roof hasn't sprung a leak or the walls haven't shifted out of place.
So even if we've got a solid plan in place, we still need to make adjustments along the way.
Exactly, because markets are constantly moving and changing, and your investments won't always grow at the same pace. So over time, your portfolio might become unbalanced, meaning it no longer aligns with your original goals and risk tolerance. That's where rebalancing comes in. It's about making sure your portfolio stays aligned with your overall plan.
Okay, that makes sense. But there's one more thing Darst talks about that I want to make sure we hit correlation.
Ah, yes, correlation. That's a good one. It can be a little tricky to wrap your head around, but it's super important.
So break it down for us. What is correlation and why should we care?
Well, basically, it's about understanding how your investments relate to each other. Like, do they tend to move in the same direction, or do they zig when the others zag? Because ideally, you want a mix of investments that don't all move in lockstep. That way, if one area of the market takes a downturn, you've got something else to potentially offset those losses.
So it's not enough to just diversify. You have to make sure your diversified assets aren't all best friends moving in the same direction at the same time.
That's a great way to put it. It's about having a well-diversified portfolio with the right mix of assets for your risk tolerance and goals, and making sure those assets aren't too correlated with each other. Because just like with anything else in life, relationships matter. And in the world of investing, understanding those relationships can make all the difference.
It's like you always hear people say, don't put all your eggs in one basket.
Yeah.
And that's totally true. But then you also got to make sure that you're not putting all your baskets on the same cart and wheeling them all into the same room.
Oh, exactly.
Okay, this is all starting to paint a really clear picture for me. But I have to imagine, just like our lives change over time, our financial house probably needs some renovations every now and then too. What worked for us in our 20s might not cut it when we're in our 50s.
Got it. It's not like you set it and forget it. Our lives are always changing.
Right.
Yeah.
So our investment strategies need to be able to adapt and change along with us.
Exactly. Think about it like, I don't know, your living situation. Like when you're younger, you might be cool with renting an apartment, moving every few years. But then as you get older, maybe you're like, okay, I'm ready to settle down. I want some stability, a place to really put down roots.
Yeah, that makes total sense.
Well, investing is kind of like that too. What works for you at one stage of your life might not be the best fit later on.
So how do we make sure our investment strategy is, like, keeping up with us?
Well, you gotta check in with yourself every now and then. Ask yourself, what's really important to me financially right now at this point in my life? What are my goals? What's my risk tolerance looking like these days?
And then based on those answers, we can tweak our asset allocation, maybe shift things around a bit.
Exactly. Like maybe you decide to move towards a more conservative approach as you get closer to retirement, or maybe you're feeling a little bolder and want to take on a bit more risk. It's all about finding that sweet spot, that balance that feels right for you.
This has been seriously eye-opening. So for those of us listening who are ready to roll up our sleeves and actually put this into practice, what's the first step?
Honestly, I'd say just take a good look at where you're at right now. Look at your portfolio. What's in it? How is it allocated? Does it line up with your goals, your risk tolerance, your time horizon?
It's like holding up a mirror to our
Yeah,
finances.
exactly. Once you've got a clear picture of where you stand, you can start thinking about those key principles we've been discussing. Diversifying across different asset classes, being strategic about how you allocate your assets, and rebalancing your portfolio periodically to stay on track.
And remember, we're not talking about trying to time the market or chase after the latest hot stock tip. This is about having a solid, long-term strategy.
You got it. And hey, don't be afraid to reach out to a financial advisor if you need help creating that strategy. They can be a valuable resource.
This deep dive has been seriously valuable. I feel like I've got a much better grasp on this whole asset allocation thing now.
Well, that's what we're here for. Knowledge is power, right? And when it comes to your finances, a little knowledge can go a long way.
It really can. And that's what this deep dive has been all about. So until next time, keep exploring, keep learning, and keep diving deeper into the world of investing. Your future self will thank you.